If your money is just sitting in your bank account, you are losing money to inflation. And CD is quietly beating inflation, and you are missing out. So today I'm going to dive into CDs, and I've talked about this on the channel before. And on the comments, a lot of people were talking about me referencing the different rates affected by your CDs, right? Or different rates that you get with your CDs. And so today we're going to dive into that. But just a quick refresher, let's talk a little bit about when we say inflation, what does that mean? So inflation, when your money sits in your bank account, it loses value, right? So if you think about prior years, let's say $100 5 years ago could buy, I don't know, groceries that are maybe a little bit more groceries than they can buy today, at least. I know that for sure, right? And so what that means is your money is losing value. And so that's in a nutshell what inflation is. And so if your money is just sitting in your bank account, it's losing value. Because as you may or may not know, when your money sits in your bank account, you get 0.0000001% back on your money, while the bank lends out your money and gets 9%, 10%, or whatever the loan rate is right now, depending on people's credit, whatever that other factors are. And so you might be wondering, what are CDs? Now, CDs are certificates of deposit. And so what happens here is usually you give the bank your money, or you deposit a certain amount of money in the bank, and they promise you a certain interest rate. Now, that I didn't really explain previously, so we're going to explain that here. So I'm going to talk to you a little bit about the pros and cons of having a CD. And you can determine for yourself if having a CD in this era is worth it or not. It depends on your goal, your aspiration, and what you're using your money for. So for instance, let's say, and let me share my screen so that we can all see what's happening here together. Okay. Now, when it comes to your interest rate, okay, CDs, and I might need to say here, typically you need to have a minimum amount of money to deposit, right? And I've seen where it's 500 for some banks, but of course, before you open a CD, it's going to be important that research whatever I'm talking about, right? And every bank is different. You have your credit unions, you have your typical banks, the bigger ones like Chase, Navy Federal, and all those good stuff. So you want to really, if you are interested in getting a CD, you got to shop around to see which one meets your needs best, especially looking for the different interest rates. And some have a minimum of 500. Some may have a lower minimum. So you definitely want to make sure, depending on what your pockets are like, you want to look at what is best for you. So yes, so some CDs do have a minimum amount that you have to deposit in order to get your the interest rate. So let's kind of talk about what maybe of interest to others. When we talk about it now, there are different terms, right? So you have your short term, and now I don't know if there's any that's shorter than 6 months, but maybe there is. I think there is a 3 to 6 month period that you can do a CD for, right? You have 3 to 6 months. Then you have medium, you might call it, or let's say midterm. You have midterm. And so the midterm, well, that's going to be between 12 and 18 months. And then, of course, we have our long term. And so with the long term, that's going to be between, let's say, 2 to 5 years. Okay, so these are the different time frames that you may get your CD for. And so this is why I say it's going to be important that you really think about what is the reason for your money, what is your goal for your money, and what are you trying to accomplish. Because if you have, let's say you have a goal to, I don't know, save for a deposit on a house, if something came to mind, I don't know, right? And you're saying, okay, I don't want to buy that house until 2 years from now. Then you can lock that money in for a long-term CD. But if you have short-term goals, like you want to go on a trip or something, and you just want to get some extra money on your money that's sitting in your savings account right now, you would probably want to get a 3 to 6 month short-term interest or CD. So yeah, it depends on whatever your goals are when you're opening a CD. So you don't want to just willy-nilly go and open the CD without doing these different type of things, thinking about the goal. All right, so now let's kind of see what's the rates, or what are the rates for these CDs that we're seeing now. Now, I will come on camera because I got to say this. Because typically, what we see is the longer you put your money in the CD for, you should get better rates. But what I've been seeing when I'm looking up different CDs, I'm seeing the reverse. So I don't know what's happening today. This is today, September 4th, 2025. When I'm looking up, and again, it depends on the bank, and that's why it's going to be very important that you look up these things. But I'm seeing 1 year terms having higher interest rates. And so I don't know if the banks are like, just, gives you money for a year and then just give it back to you. But the good thing about that is if you do want the longer rate, or not the longer rate, but the higher rate. If you want the higher rate and you see that 1 year has the higher rate and you really wanted to do, let's say, 2 to 5 years, you can easily, once that 1 year is done, keep that money in, lock in another CD for another year, and just keep rolling that over. So if I were you, let's say I have money that's just sitting there, right? And I don't have any intentions of using it. I'm just saving for, let's say, retirement or whatever you're saving for, a big trip, whatever. You might want to say, okay, I just want to keep rolling it over. So look for the highest interest rate that the bank is offering for the CD. And if you can afford to keep your money in for 2 years, leave it there. For 1 year, leave it there, roll over after that first year, and keep that rolling going. But typically, the 3 to 6 months will have a lower rate, right? But again, it also depends on your bank and what your goal is for your money. So, of course, let's kind of talk about the rates. Now, what I'm seeing here is in this time we're in, the interest rate spans from 4% to 6%. And somebody might say, well, that's quite low. Well, remember I mentioned that the bank has given us, and let me write this out so you can see the big difference. The bank has given us, right, 0.0000, some more zeros, 1%. Not even 1%, right? And so compared to 6%, that's a big difference. Or 4%, right? That's a big difference. And so you really want to think about what the inflation rate is right now, right? The inflation rate right now currently is 2.7%. So this is your inflation rate. Okay? So if that's their inflation rate, 2.7%, and the bank is only giving you 0.00001% back on your money, think about that for a minute. Your money is sitting in that bank account, right? And you're losing value over time, especially for those of us, back in the day, they're like, take your money out the bank. The banks are horrible. The banks are evil, right? And you put it under your mattress. I don't know if people do that anymore. You really lose the money because you're not even getting that 0.001%. I know we say cash is king. You should have a little bit of cash on hand, but make sure you have some money to beat inflation. And so that is why the CDs giving us 4 to 6% is a little bit better than having your money in a regular bank account. Now, disclaimer, I will say some cons here with having a CD. Okay. Now, the first con, and so let me just show you guys what those are. And this might be the most, I don't know, inconvenient con is if you put your money in the CD and you decide, oh, I'm going to take it out early, you have fees to pay. So fees for early withdrawal, right? You know what I'm trying to say, right? And so, WITH, you know what I'm trying to put here. Yeah. So that's really the biggest one. You have fees for early withdrawals. And emergencies happen and stuff happen in life and you may need your money. But sometimes, you just take a fee and keep it moving. It's still better than that 0.001%. Sometimes take the L and keep it moving. Who cares? The other con that one might think about, and for me, this is one of the things that you want to really consider if this is even worth it. When I look at a high yield savings account, and I talked about that previously, and maybe I'll do a video on each of them. Yeah, let's do that because this is getting quite lengthy. But yeah, it may be like, the high yields are given similar rates, so why put your money in a CD? But we'll talk about that another time. So let's do a quick refresher on your CDs. Okay, so you have, oh, that's a con too, right? The minimum payment. That's also possibly a con, right? You have a minimum payment that you have to put in to get a CD. And then again, that varies. You have three different terms of CDs. You have a short term, which is 3 to 6 months. You have midterm, which is 12 to 18 months. Long term, 2 to 5 years. And again, this depends on, well, what do you plan to do with your money? That will help you to determine which term is better for you. The good thing is it's beating inflation, okay? And that's, let me get back here. That's what we want, right? Again, I cannot stress enough, you don't want to just have your money sitting blindly in an account, all right? The good thing is, I don't care what anybody says, CDs are beating inflation, and it's a safe bet for your money. The more money you put in as well, the better rate you may get. So the CDs do differ based on the amount of money you put in and the time span that you have it in there for. So, sometimes you may have to make some calls and say, hey, I got $1,000, I want to put in a CD. What's going to happen here? Something like that, right? So, of course, do what's best for you and, your family and what your plans are for your money. But do not leave your money in a bank account, whatever you do, because you are losing value or your money is losing value just sitting there. All right. And so I hope you found this video helpful. On this channel, I do share tips and bits to help everybody increase their wealth, because my goal or my aim on this channel is to bridge the wealth gap. And I believe that everybody deserves to be wealthy, even you. And so if you have a friend who you think needs to know this, do share this video, like, and subscribe so you can get the next video once it drops. Until next time.